Hello friends, welcome back to our YouTube channel Institutional Price Action Trading IPAT. So today we are going to see one very famous intraday trading strategy which is called as gap trading strategy. So in this video we are going to see four intraday strategy with the gap, which is called as a gap unidirectional strategy, gap pullback strategy, gap down in uptrend trading strategy, and gap up in downtrend trading strategy. So let's look at one by one. Before going into details of this strategy, let us see what is gap in trading. So gap is area between close price and open price for 2 consecutive days. So there are two types of gap, which is called as gap up and gap down. In this case it is gap up. Similarly it is gap down. So the general question that may comes to your mind is, why do prices gap up or gap down? So there are a couple of reasons for gapping up or gapping down the securities. So few of the reasons may be like imbalance between demand and supply, so that can result it into a gap. There may be overnight sentiments change. With this regard, it means like the stock is trading higher in today's trading session, but somehow some news came into that stock overnight and the sentiments of the people has been changed. So that may also cause gap down. Third thing will be earning release after market hour. And the fourth point is institutions trap at important SR, that is support and resistance. So what we need to learn before going into the strategy. So I have segregated 4 concepts which is a fundamental base to go and implement it into our strategy. So first point is opening swing. Second one is first high volume candle of 5 minutes. Then previous day high and low. And fourth point is VWAP indicator. Let's see one by one. So opening swing is nothing but a swing that is done at the initial session of the trading day. So as you can see on the chart, this is first opening swing. Then second one is first high volume candle. So our time frame will always be 5 minutes for intraday. So second point is first high volume candle. That means the first 5-minute candle is having a highest volume compared to the previous trading day last session. The third point is previous day high and low. So it is nothing but marking the high of the previous day and low of the previous day. This is called as a previous day range. And the fourth point is VWAP indicator. So you need to add the VWAP indicator, and we will use this indicator to get a signal in our entry candle. So whenever price will be above VWAP, we will try to go for long, and when it is down, we will try to go for short. So right now what we are going to see. So our 4 strategies are divided it into 2 main strategies, which is called as a outside gap, and second one is inside gap. So outside gap is nothing but the gap which is occurring outside the range of previous day. Range means high and low. In this case it is gapping up and it is a outside gap. In this case it is gapping down and it is also a outside gap. So based on this outside gap, we will see two types of gap trading strategy, which is called as gap unidirectional strategy, and second one is gap and pullback strategy. The second type of gap is called inside gap. That means the gap is occurring within the range of previous day. In this case, the gap down happens at the opening and that gap is within the range of previous day. Similarly, in this case, the gap up happen in the second day and it is within the range of previous day. So based on this, we will see two types of strategies, which is called as gap down in uptrend trading strategy and gap up in downtrend trading strategy. So first one is gap unidirectional strategy. Remember, we will use the outside gap for this strategy. So the rules are like gap up above previous day high. So stock should gap up above the previous day high. Second one is first high volume 5-minute candle should be there. Third is prices should above VWAP and our entry will be the high of signal candle and SL below low of that signal candle. That means first 5-minute candle. And for short trade, we will do exactly the reverse of it. So let's see example. So in this case, as you can see on the chart, I have marked previous day high and previous day low as well. And now on to the trading day session, prices gap up above previous day high. So our first point is gap up above previous day high. The second point is first 5-minute high volume candle should be there. So look at the volume and this first 5-minute candle. So this volume is greater than the previous trading day last session. So what it is indicating to us, like the prices are gap up above previous day high, and since the volume came in with the first 5-minute candle, it also indicates that buyers are also in the direction of a gap. Buyers are also interested in the direction of a gap. So that's why this volume came in, and it indicates we will go long over here. So our third point is prices should be above VWAP. So in this case, the close price of 5-minute candle is above VWAP and entry above high of signal candle and SL below low. So first 5-minute candle will be our entry or signal candle. So we will go long at the high of this candle and we will put the SL below low of first 5-minute candle. And your target may be 1:3 or 1:5 in an intraday trade. We will see the short trade as well. So as you can see, prices gap down below previous day low. So this is the range of previous day high and low. Prices gap down and first 5-minute candle is there with the high volume compared to the previous trading day last session, and prices also closed below VWAP. So we will take the short entry at the low of this candle and we will put the stop loss at the high of this candle, and we will try to go for 1:3 to 1:5. There is one exception in this trade. So as you can see, the previous day high and previous day low is marked. In this case, prices gap down below previous day low. But look at the first 5-minute candle. It recovers back into the previous trading day range and with a high volume. So it is indicating that the gap down is rejected by the market participants and they do not want to continue into that direction of gap down. Rather, they want to take a reverse trade. So we will also follow and identify these key points, and we will go long at the high of this first 5-minute candle, and we will put the stop loss at the low of this candle and look at this explosive move on to that trade, because the sentiments drastically change into the first candle itself. So that's why the stock may continue in an uptrend till the end of that session. Similarly, exception in short trade, like I have marked previous day high and previous day low, and prices gap up near to previous day high, and the volume of first 5-minute candle is also very high. But there is one exception, like though this candle has closed above VWAP, but it failed to go above that one. That means it failed to follow through to that candle and it closed within the range of previous day. Thus, it is indicating that this gap up is not sustained and market participants want to take the prices lower. That's why we will take a short trade below low of this candle. So you can take the short over here or here at the retest and put the stop loss above high of that candle, and you can manage 1:3, 1:5 trade. The second strategy for the outside gap is gap pullback strategy. So the rules are gap up above previous day high, then wait for gap fill till close of previous day, pin bar formation at gap fill, entry above high of pin bar signal candle and SL below low of that candle. And for short trade we will exactly reverse the above. Let's see on to this chart. So our first point is gap up above previous day high. So this is the day 1 high and low. Prices gap up above previous day high, then wait for gap fill till close of previous day. So we will wait for gap fill till previous day range or the close prices, and there a pin bar will happen. So we will identify that signal as a long opportunity and it is a gap fill. So we will take the entry above high of that candle and we will put the stop loss below low of that candle, and we will try to go for 1:3, 1:5 trade. Similarly, for short trade, prices gap down below low of previous day range and then it pulls back till the close price and then it forms the pin bar. So we will identify this as a signal for short opportunity and we will go short below low of that signal candle and stop loss at the high of that candle, and we will try to go for 1:3, 1:5 trade. Our second main gapping strategy is inside gap trading strategy. So in this the rules are like we will try to look for inside gap up, then previous day last trading session context in uptrend making higher highs and higher lows. Third one is mark opening swing, initial swing high and low, entry above high of breakout candle of above range and SL below low of previous candle. For short trade exactly reverse the above. Let's see onto the chart. So prices are gapping down in this case within the range of previous day. See over here. And what we will do, we will try to look for what happens into the previous trading session. So as you can see, prices are making here higher highs, higher lows. So this is an example of a uptrend. So previous trading day session was uptrend, but prices gap down. So what we will do, we will wait for initial swing to happen. So the initial swing will be like this one. This will be the initial swing. So what we will do, we will mark the initial swing range, which is this range, and we will wait for the breakout of this range, either upside or downside. See this one. This breakout happens into the up direction, and see the volume as well for this breakout. So we will take the entry at the high of this candle, and stop loss will be the low of previous candle, which is the breakout candle. So this is the breakout candle, and the previous candle to this one is this one. So that's why we'll put the stop loss at the low of this one, and we will go long at this area, and we will try to go for 1:3, 1:5. Similarly, for fourth strategy will be there, which is called as gap up in downtrend trading strategy. So as you can see, previous trading day session was a downtrend because it was making lower lows and lower highs, and now prices gap up. See, this is the gap. Prices gap up within the range of previous day. So this is a range of previous day, and prices gap up internally. So this is called as a inside gap, and then it makes a initial swing. Okay, so this will be the range of our initial swing, and then the initial swing breakout happens in this candle. So see over here, it is gap breakdown and with volume as well. See, increasing volume is there. So that's why this breakout is confirmed. So we will take the entry below low of this candle, and stop loss will be the high of previous candle, which is a breakout candle. So this is breakout candle, and stop loss will be the high of that candle. So we will go short at this area, and we will try to look for 1:3, 1:5.